Hey guys, this is Hayden Crabtree, and today I'm coming to you to talk about a very hot topic at the moment, which is the housing market. What is the state of the housing market? Should we see a housing market crash in the year 2021 or maybe 2022? So this is going to be a really popular video. I'm going to throw at you some key stats, some figures that I pulled, that I've listened to, that I've heard, that I've been watching, that I've been monitoring, and try to tie all this together to give you a holistic picture of why the housing market is at an all-time high, why the housing market could potentially crash, what are the factors that could lead to that, and then what are also the factors that could continue to make the housing market go up. We'll talk about for how long the housing market could continue to stay, at the all-time high, or even continue to make even higher highs. So I hope you guys will enjoy this video. Before we dive in, like always, I'm going to get straight to the facts. We're going to talk about some things that you need to know, you need to understand. But before we do that, if you could hit that like button, if you could subscribe to the channel, I would super appreciate it so that you can watch more of my videos on the channel. If you need a copy of my book, Skip the Flip, bestseller, you can grab that. The link is in the description. But other than that, I just want to jump in because it's going to be a pretty juicy video with a lot of details. So let's get to it. All right, so I'm making this video in middle of April 2021. Essentially, the housing market is at an all-time high. We're seeing houses across the country the day they go on the market receiving multiple offers, sometimes $30,000, $40,000, $50,000 over the asking price, with multiple bidders coming in on it. And needless to say, it's just a really, really crazy housing market right now, especially for people in the right markets. Okay, so a lot of this is going to be themed around the right market. So let's talk about that before we dive in. Across the country, whenever we think about real estate, there are three things that are the most important. That's location, location, location. And that's also really, really true not only in the commercial real estate and investing world, but in the residential and the housing market as well. So whenever we think about the housing market, we really have to dissect. And one of the things that my mentors told me when I was first getting started, is that real estate markets, there is no such thing as a national real estate market. There are hyper-local real estate markets. So what that means is that you not only need to think about like, hey, Georgia is a housing market, or Florida, or California. You need to think about housing markets as hyper-local areas. I'm talking about all the way down to a zip code, or even 2 to 3 mile radiuses is really what you should think about whenever you think about a housing market, a real estate market, hyper-local. Not even local, hyper-local, okay? So what I think we're going to see as we go into the future is that we're going to see some markets that just continue to boom, not only for, this year, but for the next 5 or 10 years. I think a good example of that, would be somewhere like Austin, Texas, or the suburbs around there, where people are just going to, in droves, right? Tons of people are moving there and migrating there. And I think we'll see other areas, like New York City or wherever, where people want to move out of, people want to get out of right now. Those markets could bust while other markets boom. And I think it's important to understand that whenever we talk about the national real estate market. We're going to throw out some national figures, but that really could mean a lot for some areas, and it could mean not so much for other areas. So one of the key stats I want to dive into here is last month in March, we had an annualized adjusted rate of 1.74 million homes got started. So what that means is that last month we had 145,000 new homes break ground. 145,000 homes start in the month of March 2021. And so that's pretty important to know, because these are brand new homes. These aren't old homes. It's not a matter of transactions. These are brand new housing units that are going to be brought into the market. And so for every single unit, obviously multiple people can live there. It's not one housing unit per person. But I think another key stat to kind of think about as we go along is that from July of 2019 to July of 2020, the United States population grew by 1.64 million people. Okay, so last month, we essentially started an annualized rate of 1.74 million housing units, but we had a population increase of 1.64 million homes. So to go along with that, we also really need to understand that not all of these are houses. Some of these can be multifamily units. They could be, duplexes, triplexes, quadplexes, or they could be apartment buildings. That's how many units that we had get started, right? So if a house would be 1 unit, but if we had, 400 unit apartment complex, that would account for 400 units. So it's just some numbers to keep in mind. The population's growing, but right now the housing market is growing faster than the population is growing. but according to Freddie Mac, a government entity, is that we are currently short 4 million housing units in the United States. So even though we're putting out more units than the population is growing, we're still at a 4 million unit deficit in the United States, meaning that there are 4 million people out there who really aren't in a good living situation, and they could use a whole new unit or a new setup all to themselves. So there's a lot of room, there's a lot of runway to grow because the population is going to continue growing, the housing market is going to continue growing, and we just need to think about the supply and demand metrics as we kind of go into this. Okay, so I see that it can continue. There are 4 million people who need to go out there, who need a new housing unit. So to me, what that essentially says is that, we have room to build. If the population wasn't growing and we didn't have a deficit of units, then I could see how, the demand curve starts to go down. But because there are still more people looking for a housing unit than there is, being built right now, the demand is going to continue going up. I think another thing that's really lighting the fuel underneath this fire is coronavirus, right? A lot of people's lifestyle have changed so much in the last, year, 14 months, where, we never really could have imagined, 2 years ago that we'd be here today. But people are moving in droves out of big cities, and really one of the biggest places that all of these 1.74 million annualized homes that are being built is in the Midwest, is in smaller cities, where people want to move to because people want more space, right? One of the trends that we're seeing is that people are working from home. They're not only working from home for now, they're going to be continuing working from home forever. So if I was a house builder, one of the things I would be doing is making sure that I get good internet into the communities that I'm building, that every single home has one or maybe even two home offices where people could work out of. I think that'll be a big trend, big opportunity, big differentiator for people coming up. I think we'll start to see houses not only measured in bedrooms and bathrooms, but I think we might even start to see how many offices, home offices does it have as a key stat. And I think that'll be a really important feature going forward in the housing world, in the housing market, right? But as all these homes get built, one thing that's really important to understand is that how are people affording these homes, right? Obviously, some people are working remote, but there's a lot of people who are unemployed right now, living off of government benefits, and these are people who maybe can't reach that new home, that top end of the market. But one of the bad things is that the homes that are out there that are currently for sale, it's in the shortest supply ever, right? Is that I think that it was last month we had 173,000 fewer homes for sale than the month before, meaning people just aren't putting their homes up for sale, right? And think about this. If you had a home that you were living in and you wanted to move, you wouldn't put your existing home up for sale until you had a new home to go to, right? So if you don't have somewhere else to go, you don't want to sell your place because then you're stuck without a home and you're in the same shoes as 4 million other people who need a place to live, but really it's just not there, right? And so what this is doing is this lack of homes being for sale is driving the prices up through the roof. Another fact feature that's driving the prices up through the roof is that material prices are at an all-time high. Lumber prices have never been higher. I can tell you this from personal experience in my house renovation. The cost of lumber had almost doubled from the time of when I started my house renovation to when I finished my house renovation. And I think it'll continue to go higher and higher and higher. I think that labor is also at an all-time high because of these government benefits that are getting handed out. People aren't necessarily incentivized to go to work. Building houses, construction, manual labor is not, the most fun job in the world. You really have to be incentivized in order to go out there and do it. People who need jobs, who need work, who need the money. And guess what? Whenever the government hands out benefits that are equivalent to $15 an hour, they're essentially paying you $15 an hour to not work. Why would I go work for $15 an hour when the government is going to give me money for $15 an hour? So what that's doing is that's driving labor prices up. That's driving, material prices are already up. And that's going to continue to drive the existing home prices and the new home prices up because the lack of supply that's there and the increased demand as people who aren't in homes are trying to move, trying to get to a house. It's just this perfect storm for house prices to continue going up and up and up. And another huge benefit that's allowing people to actually go out there and do this is that mortgage rates are at an all-time low. I recently got a mortgage on my house, 2.6%, which is insane, almost unheard of. And my parents actually just refinanced and they got a rate lower than me, which is absolutely crazy. And I don't really see mortgage rates ever going, up. in the near foreseeable future. I think that they should go up. I think that the market, if it was a free market, the prices would go up, but I don't think that the money supply in the United States is necessarily a free market at this point. The Federal Reserve, and the Treasury are controlling where the rates are. They're keeping rates low as an economic stimulus so that people will want to borrow money. They'll want to take that money they borrowed. They'll go spend that money. And it's a really bad situation because whenever rates do have to go up at some point in the future, whether that's in 2022, 2023, 2024, who knows how long these rates could be suppressed at an all-time low. But the thing is, as soon as those rates do have to start creeping back up, that's going to increase people's payments for every single dollar they borrow, right? If our interest rate is higher, no matter if we borrow the same amount of money, our payment's going to be higher just because of that one factor. So whenever we think about housing, people aren't buying the price of a house. People are buying the payments, right? Whenever I went out and I bought my house, I didn't care how much really the price tag of the house was. All I really cared about is how much am I going to have to pay for this house every single month. And that's the way a lot of people think about it. If you're a real estate agent, or you know any real estate agents, they know that people don't buy price, people buy payments. So whenever people buy payments, the biggest factor in there's really two big factors. Number one is the price of the house. Number two is the interest rate. So with interest rates low, people can afford to pay more for their house. They can pay more whenever they actually buy it because their payment is lower for every single dollar. So whenever rates do start going back up, what's going to happen is that people are going to be able to pay less because every single more dollar they borrow is going to be a bigger payment. So they're going to be able to pay less. And that's not only going to happen to one person, one buyer, that's going to happen to every person. So because rates are so low right now, because I think there is this perfect storm of frenzy of people wanting to get out of cities, of lumber prices being higher, of labor being low, I think that prices are at an all-time high. And I think that prices in housing could continue to stay at an all-time high for several years, really until interest rates change, really until the government stops giving us coronavirus stimulus, because that's a really big factor right now. So many people have money, are continuing to contribute into the economy because these government benefits that they're getting, whether they're stimulus checks, whether they're unemployment benefits, whether they're loans to their business, whether it be the CARES Act, EIDL loans, PPP loans, whatever it is, these stimuluses are giving people more money. They're going out and buying houses, or they're buying other products that are giving people jobs. And so I'm a big believer that our economy is kind of propped up at this moment. That doesn't mean that the propped upness will end tomorrow, next month, or even next year, right? We could continue to prop this thing up for a long, long time. And I think that that's a reason that the housing market should tank, but the housing market may not tank for several years. So I think as long as the support we're getting from the government of the overall economy continues, as long as rates continue to stay low, the housing market could continue to stay hot. But I'll tell you, it's not in my game plan, it's not in my business plan to bet on the fact that the housing market is going to continue to stay propped up because of these factors. I wouldn't want to be flipping any homes right now. I wouldn't want to be betting on any homes coming in and going out. So I'm not going to get any short-term loans on any house that's not an income-producing asset. I really don't like short-term loans at all. In fact, I'm going to do whatever I can to take advantage of these low rates forever. I'm negotiating in all the loans that I'm getting right now to have these balloon periods as long as possible, so whenever I get these loans, I can keep this interest rate and I don't have a risk of a credit crisis like we had in 2008 where I can't get more loans, because that is one potential possibility. So I always want to push my amortization schedule out as much as possible. I don't ever want my loans to become due, and I also don't want to bet on the fact that my house is going to have to continue to appreciate, or my property is going to have to appreciate for a certain period of time. Again, I want to go back to the basics, what I talk about in Skip the Flip, of I want to have income producing assets, things that I control, whose value is derived based off of how much income that property produces, which is the absolute opposite of where we're at in the housing market right now. But I do want to, be a good investor, take advantage of the cheap money, and I think that that's really, really important. So that's what this video is all about, is making sure that you understand that the housing market is at an all-time high. I think it's artificially high. I think it's an absolute frenzy right now, but there are a lot of support metrics like the demand, like the lack of supply that's coming on board. There are a lot of metrics that could support that continuing to go on, but I wouldn't bet on it going on forever, right? I wouldn't bet on the housing market continuing to be at an all-time high for the next 10 years. I don't think that the support is there. Even if we did have, a lack of new product, even if we did still have a 4 million people deficit, if rates were to shift, if rates were to go up 1 point, 2 point, 3 points, that would seriously impact how much people could afford in housing. And I think that would really be a big detriment on the price of housing. Even though people still may need it, people may demand it, the prices could go down of that housing. And then we really have to look, as builders, as real estate developers, can we build these products profitably, especially if lumber prices stay high but interest rates go up? If people can't afford as much but our labor costs go up because of, call it a national minimum wage rate, if that was going to play and we weren't allowed to pay people in a free market way where they could provide labor, it came at a profitable metric, then that could really, really hurt the new product coming into the market. As real estate developers, if they're not going to make any profit, then they're not going to build new units. So it's one thing to kind of consider. I see a storm in the future. How far in the future, I don't know. I don't think anybody truthfully knows when that moment can happen, but I think that you can read the writing that's on the wall of, hey, interest rates can't stay this low forever. And if it does, then inflation is just wiping out everything because people are borrowing money, and they got to have a place to put it. So housing prices, as they continue to go up, I don't know. It's a pretty bad metric for us to kind of look at in terms of an investing business plan. I'm just not there for it. So anyways, I hope you guys found this video valuable. I hope you learned something from it. If you have any questions about the housing market, drop me a comment below. But do me a favor, share this video with somebody else who you think could benefit from this knowledge. If you're thinking about being a house flipper, a wholesaler, whatever it may be, think about how the potential of the market to drop plays into your business plan, and think about how you can protect yourself from that downside. There's a lot of different strategies that you can use to make sure that you're protected in the case of a market crashing. So just make sure you're prepared for that. One of the best ways we talk about in Skip to Flip, make sure you have cash flow that's going to cover you in good times and bad. So I hope you guys found this video valuable. I'd love it if you checked out some other videos on my channel and subscribe while you're at it. See you in the next one.